But yesterday, it's worth noting, including the pound against the Oz and our position in the NZD JPY, which were taken the day before, it was a record-breaking net return day yesterday. So since we've started, we've never done a 4.29% day. Good afternoon, ladies and gentlemen. How are you getting on? Welcome one and all to today's Markets Now session. It is Thursday, the 24th, Thursday the 24th of July. Incredibly dark, pouring with rain. enjoying that British summertime. It's going well. But hey, who needs the outside when you've got the charts in front of you offering some gains like we've had recently, eh? Yeah, indeed. That's it, Scotty D. That's it. So good afternoon, everybody. Good to see you all. So yesterday, man, it was crazy. It's worth noting, including the pound against the Oz and our position in the NZD JPY, which were taken the day before, it was a record-breaking net return day yesterday. So since we've started, we've never done a 4.29% day. I can proudly confirm. So that was actually insane. Yeah, that was actually insane. We had so many trades. We've knocked out so many trades. I mean, looking at the order book tab. Obviously, you guys won't see this in real time. You'll be able to see this when the session's recorded and uploaded. But looking in real time at the orders, we've knocked out so many trades. I mean, like 17 trades so far, and of those trades, we've had 9 trades. Arguably, actually, a couple more than that, because I don't always add the stock US Open positions, just due to the nature of rushing about. So we might actually have a couple extra. So there might be, sort of 10 to 12 wins this week versus our 3 losers so far in the NZD CAD, the S&P 500, and the Euro USD, which have been our losers. Yeah. Damn, that's what I'm saying. Damn, it's been a bloody good trading session. It really has. So hopefully, again, we are going to continue that momentum this afternoon and right up until the end of the week, where I can then comfortably take next week off and not need to think about anything, which will be a huge change. It'll be a shock to the system. I'd be surprised if I didn't get ill as a result of stopping. Good afternoon to you, Braden. Good to see you, mate. And good afternoon, everybody else as well who's popped the messages into the chat there. Thank you, and hope you're all doing well as well, guys. So, yes, in short, everything going incredibly smooth, just waiting for it to end, I suppose, and to start the trough part of the cycle of the peaks and troughs. Now, we do have the ECB press conference coming out in about 10 minutes' time. I'm really on the fence of whether to host the ECB press conference this afternoon. I know at the beginning of the week I was feeling more motivated for it, but frankly, looking at everything that's been happening so far throughout the week, I feel like I just want to put the foot to the floor in terms of churning out the trading opportunities and just getting stuck into it. There's not a great deal of econ to work with this week. We are really focusing, of course, on the continuation of the trade war developments, which it's looking at this stage like it's not actually so much of a trade war anymore than it is more of a trade negotiation, which is sort of coming to an end in certain places and looking quite I wouldn't say it's looking good for everyone, but it's looking good for the US, that's for sure. But I mean, it's that's really at the forefront of what's going on now. The ECB rate decision, as I mentioned on Monday, it has it's saying that. How strange. But it is unchanged anyway. It's you can't see it for some reason, but it is unchanged. Euro, as a direct result from the ECB event, has moved an enormous 8 pips so far. Now, the press conference is where some of the volatility will hide, and it's based upon hawkish, dovish answers to the various questions. The questions are primarily going to be, what do you think, Christine, in terms of rate cuts for the rest of the year? And Christine is going to reply in kind that they are going to be based on the inflationary figures. At the moment, we've seen inflation dropping, and we haven't got the sort of presence in the data to drop the monetary policy down. They are only 0.25% from their inflationary target, so it's not exactly like it's not like the UK, and it's definitely not like the US. Very, very different scope in Europe at the moment from the ECB's point of view. So obviously the way they've handled things has actually been pretty good. Now, you obviously have to take into consideration things like trade and purchasing power and so on, because this comes into the equation as well. The US is much more of a predominant force with trade and purchasing power with the greenback than the euro is in Europe. And so that will have, of course, a huge impact on the overall inflation data, and therefore bleeding down into monetary policy from the ECB and their rate decisions. At this stage, at this stage, we know more. If we know the same, if not more, than the ECB do. So I don't really feel like it's necessary to sit through the 45-minute session with Christine and just listen to the same kind of thing at this stage. There's nothing that's been a huge surprise development. So that being said, we might as well just crack on and start churning through the markets. Now, with it being Thursday, we do have to be a little bit more cautious in terms of the amount of market exposure. It's not to say we're not going to get positions on the board, because of course we are, but I think it's probably quite prudent to reduce. Yesterday, for example, we had an entire rack of different positions on our order book. I think this time around we should potentially be focusing on just getting a couple, maybe one of each main prime in the list. That right there is going to be 5 FX trades anyway, followed up with maybe a look at the metal market. Well, we'll definitely have a look at the metal markets, but some exposure in the metal markets, energies, and then, of course, as we always do, tying it in with the US Open this afternoon. That's still going to give us a really quite a nice broad horizon with our order book. It's going to be pretty diversified, but it's also going to hopefully, we're not going to be caught in anything for too long. We're going to be in and out of the market. We're going to be clear for tomorrow. That way, in the morning, we'll do the morning session, the recap session. I'll fire out the full written review for the US Open in the afternoon as standard Friday practice. We'll be completely clear of the FX, metals and energy markets. We'll trade the US Open, and then we can be clear, and we can and hopefully not fade it. Hopefully not give back all of our hard-earned positions that we've done this week on the Friday. So starting from the bottom then, we will do our best to try and pick the best of the bunch out of the dollar primes, the NZD primes, the pound primes, the euro primes. We'll have a look at CAD Swiss, CAD Yen, and then an Aussie. So we got 1, 2, 3, 4, 5, and 6 actually. That is including the CAD. And oftentimes I can't find a good line on the CAD Swiss or CAD Yen at the moment, so we may skip those out, but we'll have a look. So first of all, USD versus the Japanese yen. Daily context at the moment is looking okay. We've got a nice continuation potentially forming. We've got a decent point of liquidity right here in the middle. We've got the big inflection point on the left-hand side. A little bit of a shame that it doesn't have any kind of reaction to the market there. But as we go along throughout the last couple of months, what is that? March, so April, May, June. Yeah, so few months. April, May, June, July. It's a little bit more actually. We've been down there for a while actually. So yeah, it's more like 4.5 months. But it's still looking pretty good, and we've still got some reaction to it, right? So we've got the break, close, retest, the continuation there, and we've come down. We're getting, I would say that's a bit of a knee-jerk reaction, especially on the daily time frame, right? We've wicked down right to the low here of 145.85-ish, and we've got this big push happening at the moment. Obviously, with the nature of the euro dropping down, it is going to affect the US dollar. And of course, with the ECB press conference happening this afternoon, we have to expect some volatility. So again, it would be prudent to potentially look at setting pending orders up after the US Open. So we can look at the positions now, make a bit of a plan of action, but potentially stall our entries on those euro pairs as a result of this afternoon's ECB press conference. Well, it's just depending on the setup. I mean, this USD yen at the moment, based on buying back into the market from big liquidity down here, we've got this really nice point of liquidity there as well. It's a very, very nice, well-rounded trading margin. Unfortunately, we've already broken above the damn thing. So that's a little bit of a shame. We've got a really nice breaker structure point, which is about there. And yeah, I mean, if this contracts, we could definitely look at a market order here. I do like this. This is a decent opportunity, but I would need to see the contraction. It doesn't need to contract much either. Maybe we should just stall here for a moment and just see if it happens. Yeah, because that's going to be that point. Yeah, running right the way through there. So if it does contract, it's got a nice place to come back to. And that's yielding a 1 to 2.45. Tell you what, team. I'm just going to flip over to my terminal here. I think I'm going to... Look, we'll give it a couple of minutes. Maybe not even a couple of minutes. We'll give it a minute. See if it contracts, comes back down. If I can get a fill at around 146.77, I'm going to take that trade. All right? I'm tired enough already today. Please don't make me listen to Lagarde. Yeah, don't sweat it, buddy. Don't sweat it. Right, come on. Let's see where we're going here. We do run the risk, of course, of this coming back down in the press conference, but just get that fill. Oh, come on, buddy. Come on. It's a little bit high. It's a fraction higher up on my MetaTrader, so just gonna give it a minute. Yeah, it's coming. It's coming. Right, boom. Filled at 46.7. Okay. 7. That was a 2, wasn't it? Hey. 6.2. All right. So that's that. I'll download that one as well. So that, I will check the USD Swiss as well. It's probably going to be very much the same setup. So we've got a nice trading margin. This was our win this week, USD Swiss short. We do have the floor there, which is going to be directly above the price action. So frankly, that's not going to be a goer for me. So the USD yen is the one. What about USD CAD? No, that's going to be a rock and a hard place as well. Could be setting us up next week for an amazing long, but I'm not going to be here. So you guys will have to be self-sufficient next week, and you'll have to kill it for me. Right, let's tag that green and move on to the New Zealand dollar pairs. So NZD USD, don't really want to be trading that one short at the moment, do we? If we're trading the dollar against the yen, would it be good to short the New Zealand dollar against the yen as a hedge? Ooh, yes, not bad. Not bad, not bad. So we're coming on to big liquidity here. Great structure. I think I've said this over and over again. Every time I clear down the charts at the end of the day or whatever, and then we hit the NZD JPY again, it's like, oh yeah, really nice range at the moment. So yes, I mean, it's besides the point, isn't it? It is a really nice range. We don't have enough time left in the week to take the full scope of the position, but we certainly do have enough time to take a very short-term day trade down below. So we've got the sort of range within the range here. This was really nice point of price equilibrium before we got the little breakout up to the highs there. And it also makes a very decent breaker structure for that potential short. We actually don't need the zone that wide. That can be like this. And that's still well within the parameters that we've set out before us. So then we can go short there, pending order. And we can have a target profit there of 88,304. We're going to set up a stop loss at the round. Yeah, that's what I'm looking at. So that's a 1 to 1.9. I mean, look, that's going to cover the loss if there is one on the USD yen. And that's what this is predominantly there for, to cover the loss of the USD yen if it is a loser. If the USD yen isn't a loser, then this isn't going to trigger. So it is doing its job if we have the stop loss there, but it's a wide stop past the margin, isn't it? I can't help myself. I think I need to have that stop loss just a little bit lower here. Maybe you're looking for a 1 to 2.4. It's still a really nice margin. This is, without a shadow of a doubt, the established high. This is a fake out. I would like to get it in there for the sake of having that protection, but for also having a 1 to 1.9 versus a 1 to 2.4 in this instance, I'm just like, yeah. So I think I'm going to go for that one as the pending order. So let me just update. Let me just flash over to our book and update. I didn't actually do the USD yen either, did I? So USD versus the Japanese yen. That was a market order breaker structure for a long. And then we've got the NZD JPY pending order breaker structure short. And both of those obviously at the moment are ongoing. Okay, cool. So that's those. I will download that one now for you. So moving on, we've got the pound primes. So pound against the dollar, yen, Swiss, CAD, and Australian dollar. We don't have any CAD yet. Let me check the Canadian dollar primes first of all, actually, because it might be an idea to take a pound CAD if the Aussie CAD isn't looking great either. So we'll just look at these ones quick. No, not necessarily. The CAD Swiss. CAD Swiss has been a grind fest, hasn't it, for a long time now. It really has. We've got the highs up there, which is, look, it's not bad. That high is definitely not bad. It's well established. We've got a lower low series of lows going on down below. The main one predominantly here, I would say. I have to admit, that's not actually that bad. Trading margin is certainly there on that one, isn't it? Where's the breaker structure going to be then, if we did decide to take this one? So let's have a look at the breaker structure quickly. Right in there is where I would probably have my breaker structure. Maybe a touch lower. Yeah, probably about there. That's where I would have my breaker structure on that one. We've had one stop out in recent history, and that's it. And we've had a lot of wins. So I'm going to go for that as a pending order short. So CAD against the Swiss, not a common instrument that we have. but nevertheless, it still looks very good. And I'm going to have my stop loss for this one. I really want to try and beat some of these highs in the market that run through this area in here. That's a 1 to 2.35. I'm going to bring this trade down to a 1 to 2.14 just to incorporate skipping out the highs that have been dotted around this area. It's not going to skip them all out, but it's going to skip a lot out. And that's just offering a second layer of protection there for our short. So that's looking really nice at the moment on that one. I'm going to add that in to our book as well. So that's going to be a CAD. Whoops. That's going to be CAD against the Swiss, pending order, break of structure for a short. Very, very nice. And then back to it. I tell you what, guys, I'm actually going to add that one in now. And that's simply because the market's dipping down. I don't want to miss the beat on it. All right? Just give me a moment. I'm just going to punch that in. Yeah. Short. 58 to 1. Yeah. Okay. All right. Yeah. Cool. Alrighty. Next up. So that's the CAD Swiss. We're looking at CAD Swiss short. We're looking at the USD yen long, and we're looking at a USD yen short. An NZD yen short. So next up, the pounds. So we got the CAD Swiss. Let me look at the pound CAD. So we're shorting the CAD against the Swiss. Maybe we should short the pound against the CAD. Going to be doing some serious work on hedging in this session, aren't we? Sometimes this strategy can really punch a hole, a decent one, by hedging all over the place. Sometimes not. Usually when there's quite large volatility strikes, that's when it gets you. But we haven't got any main econ apart from the ECB event this afternoon, which honestly hasn't really caused much of anything. So I'm thinking if we short the pound against the CAD, we could look at trading the margins down below here, and that would essentially cover us, in theory, against potential loss that we could incur from the CAD against the Swiss that we've shorted. Excuse me. So I really like this margin down here. It's got an incredible success rate. A couple of little things to note. Here and here. We've had a couple of losers. But predominantly, the market breaks down below these points, we're winning. In terms of a break of structure, I mean, I would probably say that this is the break of structure. So maybe just thin that up a touch. And then look to short via pending below here ish, targeting down there at around 183.85. Stop loss above the margin 1 to 2.32 as a static, so that's going to net return 0.54, 0.55, and that's looking really nice as well. Very nice, well-rounded trade. If we see here, we are actually trading inside the grey, which is not something that we would, make a habit out of doing. But on the 15-minute time frame, this is a fantastic ranging market inside liquidity, so it's building orders. If we go to the daily time frame up here, right, this is a really big inflection point, like massive inflection point. But in recent history, honestly, guys, it's in there because it needs to be in there to give me a heads up about this. But looking at the recent price action here, this is not the main point of liquidity anymore, right? We've got a lot of reaction going on, but the major lows are more down here towards 183. That's where the market's kind of bottoming out, and then having that very stereotypical change of hands, the bearish market turning into the bullish market, where the commercial money is being exchanged, and that's down here 183.15, 183.16 area. So I think looking at the daily time frame, looking at the context of what we've seen over the course of the last week, looking at a short down below there to the previous lows, it looks even better than it did on the 15-minute time frame for me. So I'm happy to take a punt on that one as well. So just going to update the book again. Let's flash over here. So we've got GC. We got pending order via a break of structure, which is for a short. Okay, great. That one's in. So then all we've got left to do, not all we've got left to do actually, we've still got euro and Australian dollar. So let's have a look. The euro group first of all. Have we got any Aussie dollars so far? We don't, do we? I know we're coming to the Aussie primes, but Euro Oz has been pretty bloody good to us this week as well. We did do that really nice long, trading the corrective there and the rejection from the point of liquidity. We have recently got a break close and a retest going on. It's actually retesting the main inflection point at the moment. We have this nice big area down at the lows on the left hand side as well. So if we bring that up to there, what does our trading margin look like if we were to take the breaker structure trade here? It's not very good, is it? We don't really have the room. So I think we're going to have to sit out what the euro was at the moment and wait for it to come back down to this major. And once it hits the major, maybe for you guys next week, you can look at buying that one back. I'll set you up with a plan for next week tomorrow anyway, when I'm on in the morning. If I know a lot of you guys don't make the morning session, so please get that on catch up, and I will kind of do my best to lay out a plan for potential markets to trade next week based on end of week price action this week. So that's the Euro Oz. Euro CAD, I don't really want to trade Euro CAD now because I've got a couple. Euro versus the yen, Euro NZD. So it's really going to fall down to the Euro NZD, I think, out of all the Euro pairs. I'm trying to remember the Aussie CAD's coming as well. So I don't want to increase the exposure in Canadian dollar stuff and get too far in the hole. So Euro NZD at the moment, we are coming back down to the previous lows after yesterday's buyback. We are continuing with this larger move. I would say just from a quick glance, it looks like we're in a bit of a wide 15-minute ascending channel here at the moment. So that's about there. If we bring this one up to the highs, probably got some decent establishment. Not the best, but it's good enough. So we're looking about here. So, I mean, it's not perfect. Yeah, that's actually really nice there as well, but then it messes up the bottom. Yeah, so it's not perfect, but I think we can use it as a rough gauge as to where the market could potentially go if we get the right set of criteria over the course of the next, maybe 6 hours or so. If you all scan your eyes to the median of this, it's actually incredibly good. So if we look at the median of this channel, that is incredibly established. Look at that median. It's really, really quite fascinating stuff. And so I think the upper and the lower limits, although they're not perfect, are probably going to carry more of a weight if the market decides to continue on within this channel and it becomes something a little bit more than it currently is. So we've got a really nice break close retest as well of the lower limit there as well. This is the lower limit of the median. So that's looking really good. I think, guys, I mean, this is not looking too bad. If we can get the correct access point, it might be nice to consider buying this back. It's a shame because that retest has come up to above the point of liquidity in here. So if that would be probably what you'd have to have in if you wanted it to encompass it all. Really, for me, I would be much more on the side of having something like that, and then this would be a fake out. If I wanted to take the trade idea, I would have to beat that high in there, which isn't the end of the world. That's fine. Whoops, I don't know. That's supposed to be just level only, but there you go. There. And that's not even that level, is it? Yeah, that'll do. Right, so that's what we've got to work with there, and then we could look at taking the margin back up to the median at 194.86, couldn't we? So I'm going to set that one up. It does have some room to breathe, so we're not going to run the risk of it being triggered immediately and then getting stopped out again. It is going to have to work to get up there. I'm going to have my stop loss. It's actually pretty clean, this one, so I don't need to worry about any potential wick throughs too much. I'm going to have my stop loss there, which is a very decent margin below that zone. It accounts for the couple of lows and highs that we have had, and that's going to yield, as I say, a 1 to 2.1, so that's pretty well rounded as well. So I'm going to flick over to the old order book and get that in there as well. So we've got Euro against the NZD, another pending order, and that's going to be a break of structure long. Okay, onwards. Coming to the end now of the FX basket. So we've got the Aussie CAD. Incredible move up in the Aussie CAD. Yeah, last couple of days, really good. I would say today is actually, it's a bit tired out, isn't it? We can see there's a bit of exhaustion going on up here. Essentially, that means big banks taking their money out of the table and getting ready for the next leg. So the profit's being taken out this side and it's being pumped in this side. So we're just getting ready for that next push. Now, the unfortunate thing about the Aussie CAD is we have the block for the shorts up there. And that's not too far away from where we are currently trading. Now, if you think we were going to take the trade here, then that margin's probably doable. And it's a nice day trade, could be done in the space of a half an hour, but we can't look at it like that. The truth is, we've got the highs to contend with right there. So we can't take any trades below this level, and we can't take any trades into the one above, as it's even more of a major point of inflection. So at this moment in time, it doesn't look like we're going to be able to do much of anything long with the Aussie CAD. Let's just have a quick scan at everything else. So Aussie Swiss at the moment, that's resting right inside. It's a bit of a rock and a hard place. The move up was nowhere near as nice as the ACs, and the move down was absolutely nasty. Aussie Yen, very similar situation. Is at a point of liquidity, however, and we do have this up here at the highs, which means we may well have a slightly clearer margin to trade. I mean, actually thinking about it there, that is a beautiful point, isn't it? That's really nice. But again, is the margin there? That's what I'm thinking. So we've got those highs there. You cannot mess around with it. That's what it is. Let's just fine tune this one further. So highs, got the block in there as well, got the retest low. Yeah, do you know what? This might actually be all right. So yeah, it's a 1 to 2.1. Yeah, do you know what, team? I'm going to have that one as well. I don't know why the Aussie CAD's listed res anyway. So we've got the Aussie Yen and our other Yen. Oh, yeah. Oh. No. That doesn't make sense from a hedging perspective necessarily. Aussie New Zealand. Let's have a look at the Aussie New Zealand quickly. No, definitely not that one. An Aussie against the dollar. Tell you what, there's one of James's flags there. It's a nice flag, James. So we've got that in there. Yeah, that's fine. Continuation, flag. I mean, we could potentially be looking at the continuation away from this, and we could use the flag as an entry point. This move down and these moves here have been so clean that a break of structure upon them is is actually quite the challenge. Probably be looking for that though. Knee-jerk reaction from point of liquidity there, interesting. Right, let's mark out the descending level. So that's your descending level there. Your upper one, your lower one's here. And drag that one back. There you go. Really nice little flag formation in here at the moment in real time. I think it would be really nice to get a little trade in on this one. I am thinking, I mean, in order to efficiently trade the flag, in this particular instance, it probably is going to be the break of this point in here. That's what you'll want to see broken. From there, you're going to have a pretty decent margin in the tank before we get to the all-time, well, not the all-time high, the most recent high. So that's the kind of margin you can be looking at before you get to the high up there, which is, yeah, not bad, not bad. So I think what we'd be looking at here with this Aussie dollar, if we did want to trade this one, is an entry there, a stop loss down around here, and frankly, you wouldn't even move that. Let me go to the 4-hour time frame here for a moment. Okay, let me go to the daily time frame here for a moment. So that's going to be about there. Let's go back in time, see what we're dealing with. Okay, so that's had literally no reaction or response there at all. This is good. This is good. Yeah, that's got some pretty decent reaction. I do like that level. It comes above it and below it and around that area because it is a daily chart, for example. But I think based on the fact of it moving up, moving down, and around it, you'll probably be absolutely fine looking at 66.30 as the target profit. It doesn't look as clear as some though. I have to say I much prefer that Aussie yen. So I think, look, we've assessed the other pairs at the moment. We know Aussie dollar isn't going to work. Aussie NZD, sorry, isn't going to work. The Aussie Swiss at the moment for me has got way too much of a choppy history at the moment to consider looking at potential shorts. I don't really want to go long either at this time of the day and looking at the long past 52.60, sorry. And then we've got Aussie CAD at the moment, which is a rock and a hard place, and we can't go long that one either. The Aussie yen has a clear trading margin. It's a day trading style of trade, so you're probably going to only be in it for about 45 minutes at most. It's well rounded. It's a balanced position, and that's how we do the filtering down process. So thanks to our risk profiling, that is the one that we're going to go for. So fingers crossed, it's a bloody winner. So let's open up the book and get that in there as well. So we're looking at the Aussie yen, pending order, breaker structure for a long. Yeah, and that'll be the fifth and final one. So we got 3 longs, 2 shorts, which is quite nice as well. Let's move up into the metal markets. So gold doing very well today to the downside. We are at a minus 0.83% day so far. It's running out of safe haven need and demand because of the updates on the trade situation that we've received recently. In terms of actionable trade ideas today, it doesn't look great for them. We've had this dip down here. We've got the retest now, which is quite nice. In order to take the breaker structure trade, it would have to be a breaker structure of the low. So that would be approximately your target profit around there. If we look at that level back in time, that's here. We've got a point of liquidity, an actual point of liquidity, a minor one, but it's there. And that's at 33.45, which is just a stone's throw below the low that market's formed at the moment. And below that one, we then would probably look to go down to around 33.32. So the margin from here down to 33.32 is actually really quite nice. We could definitely trade that one, but we do have the damn TRF situated right bang in the middle. And this one, just to give you some context here, team, is actually quite big. It's the bottom of a W reversal. It's the top of major inflection points here in the market in the past. So I think I would probably be clutching if I were to short gold in its current state. Above price action, we've got big liquidity there at 33.74, and that is only a stone's throw away from where price is as well. So I think, unfortunately, we're going to have to admit that we've probably missed the best part of this area at the moment. We're going to have to be a bit patient, wait to see what the next couple of days bring, and then probably hand it off to you guys tomorrow afternoon to be able to trade next week. Now looking at silver, the break close retest continuation did not play out in the end. We did get the break close and the retest. We failed to make a new high, and the market's actually just dipped off so far. We're still trading on top of liquidity at the moment, so this is still very much a bullish market, but we don't have the necessary parameters to be able to trade this one successfully. So at this stage, we're going to have to leave silver out as well. There's nothing I can do on that one right now. Even if we look at the breaker structure trade above price action, let's say get an entry of 39.16, you still have to contend with the high of 39.30 and then the high that you'd be aiming for at 39.50. So it's too many variables on that one. It does not have a flawless, well, not flawless, it's a bit overkill, but it does not have an exceptional path of least resistance is what I'm saying. We need exceptional path of least resistances as much as possible. So let's go into the energy markets then, where, hey, natural gas has officially completed the market report stage 1 move, which was the market open all the way down to big liquidity. And it does indeed, James, look like it's continuing on. It does. Orders have been building into the market all throughout the night. We've got a nice knee-jerk reaction today, big move out, positive imbalances actually in the process of being confirmed via the 15-minute break close and retest. It would be nice to see this on the daily to get that proper confirmation, but this is still looking really good, make no mistake. Now looking at the lows that were formed on the 10th of July, the 9th of July back here, well, if you zone over those lows and bring that one to the right, this is actually a new daily break of structure point for a daily trade. And this one could be really big. I mean, as far as my analysis went at the beginning of the week, we would probably be tying this technical move in perfectly with the fundamentals behind the scenes. We've got this week out of the way, almost. I think it would be really good for us to look at executing a trade in this one. Maybe this afternoon, possibly tomorrow. I don't know, it's strange taking a long-term position on a Friday, but if I'm right about the fundamental side of things with natural gas, this one could seriously be a really nice earner. Now we've got this area in here. If I were hypothetically to take the trade idea up there and wait for that point to be cleared and have my target profit all the way up here at 35.26, that is still going to yield a 1-to-3 risk reward ratio. Now, what you can do is if you want to take the market order right now, it does give you the opportunity to have your stop loss right the way down here, and that is going to be situated at the daily level of liquidity, where the major inflection points are. So I think, look, we're not going to get much in the tank in terms of price action coming up to here, probably coming back down. But I love the idea of taking a market order in this trade ASAP so that my stop loss can be really nice and low down at 3036. So I'm actually going to do that. Guys. So just, So just bear with me for a moment. Sorry, Coratin, just punching the last number here, mate. Hang on 2 secs. Right, my numbers are set. I'm just gonna wait to see if this market contracts a little bit. Oh my god. Hang on a minute, team. I want to see if this comes back down a touch. I want to try and get my fill a little bit lower, if possible. I sent the CAD Swiss into the lounge asking, yeah, it is the time. Yeah, I know you've already said it, mate. The time of day, yes. I believe that original trade idea that you were looking at, was it 6:30 or something, or in the evening at some point? For me, that's high danger time. High danger time for the FX market around then. So I'd much prefer to get those out earlier if at all possible. much earlier. Come on, let's get this down. Yeah, no problem, buddy. Come on. Right, okay, this might stall here for a minute whilst it decides, but I'm going to set an alert up. When the alert pings, I'm going to head over and punch the numbers in on that, not the numbers, punch the button on that one. Let's go, that's going to be a long. UK Brent, US crude, really missing my oil markets at the moment. Love trading oil, still not there for me, so yeah, we'll leave those ones out. And we're on to the US markets. So we are at 16, it's almost 17 minutes past 2. This is becoming the new norm now, I think, these sessions, isn't it? They're quite long. So US 30 Dow Jones, first of all, big sell-off today, interestingly enough. We are still coming down at the moment. We're trading in yesterday's trading margins, so we're going to recycle a couple of those. That's going to be those two. Very nice. I think, based on what we're looking at here at the moment, continue to trade on yesterday's trading parameters. There's no reason not to. If you want to take a short in the Dow Jones, then it's going to be a 15-minute BCR. This zone does not represent exactly how important this area is, but it is important. Look at the size of the move that we had there. You will also want to be utilizing this area here probably as your breaker structure point for that short. So it's a break, close, retest underneath the big point of liquidity, which is going to be break, close, retest, then continuation, utilizing this area as your breaker structure. But otherwise, team, you should be trading between these 2 points of liquidity. That's where the money is. That's where the money was yesterday. So, yeah. That's what I'm going to say about that one. Let me download that. As for the NAS 100 today, we've got... What have we got? We've got this area up here. This is the highs. The lows are down here, approximately exactly the same kind of trading margins that we were looking at yesterday. There's no difference at all in what I provided yesterday. We are looking at the moment trading a rock and a hard place. We're right bang, slap bang in the middle of the trading margin that we want to be using. That's annoying because we can't actually do anything now. So we have to just sit tight. The breaker structure point for the short is going to be up there. The breaker structure point for the long is going to be all the way down here. And even then, it doesn't come without some levels of risk. It really doesn't. It's not risk-free. This area in here and this area in here are very problematic, and yet this is still the trading margin available for the NAS 100 today. And then finally, we've got the Standard & Poor's. Very different than the NAS 100, apart from today's price action. It's been actually very, very similar. We've got the low there. We've got the high here. We're looking for positive or negative imbalance of price, except for the fact that the short is not, for me, going to require a BCR, actually. I think we can probably get involved in this one on a breaker structure and not a BCR. The range has been well established, don't get me wrong, but it's not really a full-on relevant range. And the previous liquidity point is about there, with 63.36. Now, if I scan my eyes along to the right-hand side, we've got this area of interest in the market at the moment, and that is going to make one hell of a trading margin. So if we get a nice breaker structure down below there on the S&P, I would probably be looking for something along the lines of this, and that's going to yield you guys a 1 to 2.45, so that's not bad at all. Very, very nice indeed, that S&P. If you want to take the long, well, you can buy back the market from the down here, or you can wait for the break close retest above the zone above to take the long, but S&P wouldn't be my choice for that. So I'm going to download that one. I'll send that out to you guys. Yeah, there we go. Right, patience pays off, guys. Patience pays off. Let me just flash over to MT5 for a second. Okay, wow. So we have actually got a lot going on here at the moment. We've got the USD yen, the NZD yen, the pound against the CAD, the Euro NZD, CAD Swiss, Aussie yen. We've had to avoid the metal markets this time around, but we do finally have the long in natural gas, and then that's backed up by US indices with the US 30 down, NAS 100, and the S&P 500 for the book today. A lot of positions happening, a lot of work to get on with this afternoon and punching the numbers in. Now, aside from that, it is also 2:22 p.m., which means you got GMT, which means you guys only have 8 minutes to go before the US Open. So I will let you go there. Please fire any questions or anything that you want to know more about the trades or anything like that into the chat. I will pick those up ASAP, and we can chew the fat on those. Well, essentially, like me and James have all day. So have a really good day, guys. I hope you've enjoyed this session this afternoon. Have a great afternoon as well. Take care of yourselves out there, and I look forward to catching up with you in the trading room. I'll see you then. Thanks, team.